Hi, Warriors. Who's ready for the Consumer Pretend Index? Plus, we had all the central bank. Let me take a guess. The BOE was today.
You got it, Dale. Sooner or
Wow.
later, you're going to get it.
Yeah, okay, anyway.
Unbeatable, Dale. Unbeatable.
All right. There were other central banks as well. Hi, Mike Nobert. Welcome to Face. You're a new name to me. Nice to meet you. Found the right place to hang out, Ingmar. Simon Nielsen likes is congratulating Stelios. That was a great call in platinum. K-Man, Hugo, Bran, AJ, Steve, James, how are you? You like consumer pain index better than consumer pretend index, which is, what some people do, pretend. Anyway, the pretender, Jackson Brown. There we go. All right. So let's take a look around. Euro's weak last time I looked at it. So I think you're going to get that pullback that you wanted to buy euro if you want to. I'm in the other camp. So here's a dollar. Now we've had two. Are we going to have a three? Three drive, it doesn't always have to be. I'd say cracking this high is going to look pretty good. And this could be an important reversal week, right? Look at that candle. So talked about 98 when we were at par, and here we are, and so far it's responding to it. Dollar bear or dollar bull, that's still a potential reversal candle. It could all change with CPI, but I think that all the dollar bears are going to get squeezed, and I still think we're going up towards 103. Okay, so that's what I think. Let's hear what the team has to say. Let's see who's here today. Ryan and K-Man are here. So start off with you like usual, Ryan. You want to start with euro or cable?
You can take your pick. You can take your pick at the moment. Yeah, we can look at the pound, seeing as we just had the Bank of England out, which wasn't perhaps as dovish as the market was expecting. There were still some dovish notes in there. They've taken a small step more dovish than they were before, but yeah, they're not going to move too far from the centre. But yeah, it's given the pound a little bit of a lift. We're seeing cable up testing 134 again as we speak. It could all flip around on the CPI, but yeah, that euro sterling, a bit of a breakdown through that prior low, 87.50s. There's a bit more 30.40s, and then the big level at 20s that I'll be keeping an eye on down there.
87.20 or
87.20, where those lows are. Just
right
yeah,
here.
all that lot there.
So if we had something like this from here, it would take it to 86.20.
Yeah, that's going to need
If
something
this is
big.
like, A, B, C,
Yeah.
if that's it. Okay, so when's the BOJ my time? Is it this
Your time.
afternoon?
I just about know when it's my time, let alone your
Okay.
time.
All right.
8 o'clock tonight, Dale, somewhere around there.
Okay. All right. Well, yeah, I'll
Yeah.
probably be snoring. Anyway, you have a take on yen before the BOJ?
I've not got a take on it sitting here right now. Though we do have some big expiries just above at 156, between 156 and 20, over 6 billion rolling off. So if the CPI nudges it into that area, I wouldn't be surprised if we're stuck there. There's a hell of a lot of expiries in dollar yen today. There's over 6 billion up at 159, and 4 billion I think at 157 ish. So yeah, I don't know what's going on there. But for the BOJ, I think the risk that we have to look out for is what happens after. If they're not as hawkish as the market likes after cutting, after hiking, if we see yen pairs shooting up, I think that's going to spell trouble, and potential intervention will be right in the corner.
Okay, I also noticed from a tweet that there were a lot of 117s in euro expiring today. You know, were that could have given you a guide earlier in the week when we're up here at 118. I didn't know that till today, but you know, they just like Vegas, like bookmakers, you wonder how they could call spreads and stuff. Ryan's work with options is very valuable. And you know, if you stayed in touch with that, you may have known when we were up here that there was still pretty good likelihood they were going to try and fry all the puts and calls at 117, right?
Yeah, it's always worth looking at the options. I mean, 90% of the time they don't do anything, but or 95% of the time. But you only need that one small moment when they have an effect. Hence why I think these big ones in dollar yen could be important, because if the dollar's moving everywhere else, but we're glued in that 156 area and dollar yen's not moving, then that has the potential for a bit of a catch up trade when those roll off. The dollar might catch up to the other pairs in that one.
All right, thank you, brother.
Thanks, mate.
And anything, Canada getting a little follow through today.
Yeah,
They could squeeze
still,
them, huh?
yeah, it's looking okay. We had a little bit of a dip, nothing much. It's still struggling to get through that 137.95, 38 area. I think if the CPI is cool and we get a test back down at that 137, 20, 30 area, that all those three lows, your black line,
Yeah.
I think if it doesn't go through on that, it's likely to reverse, and then we probably go and take out 138. So I'll be looking at that level to add back to what I've cut already from my long down there, and yeah, that could then kick it on through 138.
Okay.
And hey, Dale, let's not forget we have the ECB decision in about 7 minutes from now. Just FYI.
Oh, okay.
Yeah.
Also,
I'm sure K-Man's got a lot to talk about too.
Yeah, I was gonna get to K-Man on the metals there. So interesting that we're coming off into the CPI K-Man.
Morning,
Good morning.
Dale. Are you same time as in Arizona?
This time of year,
No,
The
no.
same time
it's an
where
hour
you are as in
difference.
Arizona?
I'm an hour
It's an hour
earlier.
difference.
If it's so, the Bank of Japan should be around 8 p.m. I was just going to, because you were asking about the Bank of
Oh,
Japan
yeah.
sort of time. It's never a fixed time
Okay.
though. It could be half an hour before or later.
Well, they like to sing
Yeah.
karaoke. They might be at a karaoke bar and have to finish a song or
Why
two, right?
noon time in Tokyo is a bit early for karaoke for them. It's a bit
It's
early.
never too early to sing.
No,
Or too late.
or unless they are still there from the night before.
Yeah, I'm sure that happens
But
sometimes.
that's those stories are not for face shows.
Okay.
Yeah.
So
No.
gold.
Don't make me. Don't make me.
All right. So gold hasn't made a new high.
No, and that's what I was saying already earlier in the week. Silver and maybe platinum for different reasons we're having those moves. So, but for today, okay, they're both coming down a bit. Silver in yeah, we could say half a buck lower, but I mean that's a bit in silver right now. But yeah, gold is. I suspect that purely CPI driven, gold should be the better mover because it's probably more linked to some inflation data than silver might have, because as I said, silver is moving for different reasons, and gold has been really underperforming silver of late. So yeah, I think there's a couple of interesting levels there on gold, and I think 42 3/4 down to 42.45 is the big zone to watch. And on the top side, 43.5. If we get post-inflation after a bit of trading, if we get outside of that range, we're probably going to see larger moves. Okay. But I mean, I think gold has been relatively on pause because there was not that much to trade on interest rates either. So the focus was elsewhere on yeah. As I said, silver, I mean, it's used for everything, including making drones for war. So I think that's one of the reasons why silver is. Um,
How about
but
risk?
yeah,
Risk broke down yesterday under that
yeah,
67.80 level. It took out the 50-day.
yeah. I have that stuff also around. I had like some decent levels around 67, 55, 60. So we're trading marginally below there too. Um, Yeah, I don't know, man. Higher CPI, maybe they won't like it if it's too sticky, and go for another round. Oh, I mean, it's year end. Everything can. Oh, and moves can be a little bit bigger. So I wouldn't rule out 66 or so if it really goes against what the market may want. But if you get a close back above 68, it's probably going to rally again, and then we post a high to close the year. So that's kind of how I look at the S&P right now. Blake was saying about the ECB. To me, the ECB should be a non-event because they are where they want to be right now. Everybody's been saying it. The only thing is, since the Hawks have been much more vocal than the Doves of late, maybe Lagarde is just going to seal the 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 fact that they are done. But of course, she might do it, but still they will still maintain a high degree of data dependency as well. But maybe there is a little bit of a dovish, hawkish, sorry, tilt to it, but it should not have a big impact to ECB. I think US CPI will be much bigger.
Okay, so I'm going to turn it over to you, Blake, so you can cover the ECB with the guys.
Sounds good.
Um,
Yeah, it's been an interesting day. I mean, we've seen the euro really come under pressure. I'm going to come back to this screen right here. The euro come under pressure, and I think a lot of it has been cross rates. You've seen, with the euro sterling just coming right back down to the wedge support here. You've had obviously all eyes have been on sterling. Even the Norwegian krona has gotten some volatility today with the Norges central bank and the Riksbank. Real quick, Ryan, did you have any takeaways from those two central banks today?
What Norges and
Riksbank, yeah.
Ricks? No, nothing really. Norges is still keeping cuts on the table for next year. We'll see if we get there. Ricks is sticking with it, it's just sitting on its hands. If they have done, but Kay mentioned, if Norges does cut a couple more times, that'll leave their rate still pretty much double what Sweden is. So that may open up some policy divergence, put a bit of money into the Norwegian krona, which has been pretty weak.
Got it. All right. And K-Man, really quick, when we're talking about the ECB, Lagarde, it's interesting you say she could put a more, hawkish spin, but at the
Yeah,
same
well,
time, I mean,
slightly.
yeah, slightly. I mean, no one's looking for rate hikes until like 2027, but it's still divergent from,
No, I'm
you know, you know.
Yeah, but her friend Schnabel said that she might see a hike next. But really, I think it should be a complete non-event, ECB. I'm just like other wishing everybody a Merry Christmas. But we're always looking at something that may stick out of the ordinary, and that may potentially be it. But I don't think that ECB is going to move the euro 5 pips. Huh? Personally, I don't think so.
All right, and thank you very much. And by the way, we are just less than a minute away. One of the things I want to point out is Bitcoin's on its highs of the session, and I know, the S&P is getting back up to the breakdown point from yesterday. So just be careful with that. I mean, if crypto continues to recover, that could be telling us that risk might actually be recovering as well. So especially considering we didn't go to war with Venezuela last night, Dale,
yeah, well,
as everybody was thinking.
Yeah, and we didn't make a new low in crude either. So, it's holding.
Yeah, yeah. All right, here comes the ECB. I mean, it shouldn't be any surprise here. As the guys were just saying, it might be a non-event, but we'll have to wait for the press conference, which is in about 30 minutes from now. So
Unchanged.
unchanged, and euros not doing much. It's recovering off the lows, you know, but I mean, we're inching a little bit further away from those options that Ryan has puts these up every day. So you guys realize that this work that Ryan does in the evening, and he puts it up here in our platforms for you to see. Combing through all of these options that are expiring. I mean, the big ones, Ryan, you were talking were the dollar yen, which are right over here at 159 and 158.
And 156.
And 156. I guess there's 3 billion. Oh, there's 5 billion down there. Holy
6
cow.
billion. 6 billion.
Six, yeah, six. I got to actually pull out my abacus here. Yeah, so there's obviously a lot of the euro just popped up another 10 pips. Anything you guys see in there?
No cables. Well, they've raised growth for the next 2 years because the forecasts are out as well. So it's bullish, not hawkish, for growth. Good luck them getting that growth, by the way. But
Why are you guys always so down on Europe? I mean, Germany is going to unleash this big, huge fiscal package. They're rebuilding their military. Come on, I mean, it's they could be doing something, and you
yeah.
never know. They might actually enlist Steve back into the Greek army.
Yeah,
Yeah, I fully agree with you, Blake. But let's have that chat again in 2030, shall we?
Yeah,
Okay.
exactly.
It's funny. Ironically, I was just watching a special on the German army and their rebuilding of their forces. I was just watching a special on that just a couple of days ago. All right, we'll come back to the euro in just a few minutes. Let's go back to. I do want to go back to actually what I was just saying about crypto really quick. And these are the times of years I try not to put too much emphasis on correlation. When you see an asset moving, I try not to just go, oh well, hey, Bitcoin's moving, so it should be buying SPOOs. SPOOs should be recovering, but Bitcoin is a beta risk asset. It really is. And the fact that it's not breaking down and it's holding like the flag support, and I know we talked about it on the week ahead video. Most of you are very well aware around that 86,000 level we were looking. I mean, based on what we're seeing, unless we don't break down, we might just trade back up towards 94. So if we trade up towards 94,000, what does that do for risk? And this is one of those that, since Bitcoin doesn't have a macro story, there's no, like, people always go, oh, why'd Bitcoin move? Was there a headline? No, there's no headline. Bitcoin doesn't do anything. It doesn't do anything at all. And it's just a high beta risk asset. So if it is moving higher, it does tend to suggest that risk might be a little firmer. And that's when I start looking at the S&P and going, okay, well, Dale was talking about the trap door, which rightly so, Dale, you caught that trap door in the SPOOs. Oh shit, I didn't want to move that, but I'll come back and remove it. We sliced through the 38% retracement. We got a little trap door down there. But here we come, back towards previous support. And this could catch some people that were maybe shorting yesterday, thinking that we're going to war with Venezuela. They might have been short. They might be caught short. Just a few things to keep in mind. You have some thoughts here, Dale, about the overnight events with Trump's speech and the non-war in Venezuela.
The biggest overnight event was Micron beating. Bigger news than the speech.
Yeah, and Micron had a big night.
Yeah, because before that, semiconductors have been getting drilled. If you look at the SOX or the SMH, looks like Micron could even eke out a new high. Semiconductors still look, we've had about a 10% decline in a week and semis. So I think that there's still more left. SMH is
Sorry,
that's all
my
right. Yeah.
typo in the morning.
So
Yeah,
pretty good break.
yeah, and having a pullback like that might give us a little chance to reload some longs, and if like I said, if
Yeah.
futures start breaking back above that
I just think
2770.
Yeah, I just think that the whole market is everyone thought everything was going to be okay until year end, and everyone's waiting till January to sell so they can defer taxes. And we talked about this time frame about it being thin, like August is when people are on vacation. And if we don't get a good number today, the market doesn't like it. I think the market's pretty vulnerable because most people think everything's okay. They're still waiting for the Santa rally. And maybe we're down hard into Christmas. So
Could
we'll
be.
see.
Santa Claus rally I've seen Santa Claus rallies happen after Christmas too. So,
Yeah, that's a January effect.
yeah, so we could get a rally post Christmas and into the new year. So, there's a lot of possibilities. I think we're going to need some guidance from today's CPI. So, I think that's obviously going to be the market mover for the day. Of course, we have the BOJ later on tonight or tomorrow morning in Japan. Matter of fact, since you are here, your thoughts on the yen as we go into tonight. I mean, you look at like here's the euro yen. I mean, strong. I mean, it's
It,
relentless, right? Sterling yen,
it's bit,
the guppy, also.
yeah.
Even some of the look at the Swiss yen. Just nonstop. I mean, what do you think about the yen as we go into the BOJ tonight?
Well, as I've been saying, and I mean, I'm a little long euro yen still. I've been taking a bit of profit. I was long dollar yen, taking that off. Because of the US CPI, so I prefer to keep a little bit of euro yen, but it's still the same thing. I mean, you buy yen for a couple of days, and then you realize that Takaichi and friends are going to spend a heap of money, and they're now starting to think about what. Well, they have already started. The Japanese companies upping their investments into the US, but that also adds to the fun. The budget is growing a bit again, so that means more funding, and I think the market is also now. I mean, that 25 BPs for upcoming is completely baked in, and they're still going to be only at 3/4%. So we need to be a bit careful for, I would say, two things. So first of all, what Ryan said, we were talking about that on the Flow show. If the market really takes yen for a walk after the Bank of Japan, the intervention risk will have heightened because
That that
we
means
are
that means if we're
in
moving
those yen
lower in yen,
crosses.
higher dollar yen, right? Just to be
Higher dollar
clear
yen, yeah, 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 higher
for
dollar
people
yen.
that don't trade currencies.
Oh, okay, yeah, higher dollar yen. This and if we trade higher, like several hundred points, I think the intervention risk will heighten. And the other one, and that's then more specifically on the Bank of Japan, Ueda will not close the door on further hikes because they are not done. But the market expects them to stop around 1%. Okay. Now, where he can be more hawkish is to tell the market that it's not necessarily a top. The problem is their cooperation agreement with government, which is it's actually sort of written down that they have a cooperation agreement. So can they take rates further? So and the market doubts it very much, me included. So I don't think they can raise higher than there. And that would still leave them lower than all the majors, right? Take apart SMB, of course, but they will still be the lowest, and that's what the market is really looking at. If you're on a day-to-day basis, you still pay to be long yen, the currency yen, not dollar yen. You get money to be long dollar yen or most of the yen crosses. So I think that's all playing and against the Japanese yen right now. But I think the most important thing is the budget. They are going to spend a lot. They will even hike some maximum amounts for taxes, the ceiling, and yeah, they will hike taxes on EVs, etc. But that's only for 2028. So and I still don't see many fundamental reasons to be long yen.
All right. Thank you, K-Man. There's Kareem just asked a question about the Kiwi, and this is probably what you're asking. I posted this chart in our chat room about an hour and a half ago, maybe. So the Kiwi, you might be looking at a more tighter time frame, but what I want to focus on is that the pullbacks in the Kiwi and the Aussie too, the Aussie's not immune to this, have been very minor. So you might be looking at something that looks something like this, where there's a head and shoulder pattern like that, which could allow for a little bit of a pullback. But if you look back out on the daily time frame, this little pullback that you see here hasn't even gotten close to the 38% retracement. And when you are that shallow of a retracement, the higher risk is that there's a big double bottom developing, and these commodity currencies still look really, really strong, and the Aussie is the same. But those we're going to need some risk moving higher. We're going to need a Santa Claus rally for that to happen, because if you look at the Aussie, the flip side is if we start breaking lower here, you got a nice little double top, you got a little pullback to the 50 DMA. So I think there's a little bit for everybody, depending on how the CPI plays out here in a few minutes. But you should be in the Forex Analytics chat room having these conversations with us, because we're talking about this 24 hours a day. Ryan, we have just a few minutes before the CPI. I'm going to get ready for it right now. What are your final thoughts here as with the euro sterling as they're making their way higher?
Another bit of a speed move going on. I think this euro picking up. But yeah, euro sterling, I'm no change to my positioning. I think the Bank of England will be cutting rates faster than what they're telling us at the moment. If the ECB get their growth forecast, and if Germany manage to pull their fingers out their butts, that's a double bubble for being long euro sterling anyway. So I can't see any massive downside coming for euro sterling unless something materially changes with the fundamentals. So onwards and upwards.
All right. I'm going to move this out of the way. I've got the S&P over here on the far left. Whoops! Damn, I didn't want to do that.
You want a fundamental on the euro? Them freezing Russian assets is a pretty big fundamental. That's going to have repercussions, just like it did for the dollar when we did it. I believe it was the Bank of Belgium where the funds were, but Russia could retaliate. There are European corporations that have money in Russia. They may lock up 105 billion over there just to mirror that action. So
just another reason to be buying gold, Dale. Just another reason to be buying gold. I'm gonna pull this over. Steve, we haven't heard from you. We got less than a minute, but are you going into the this fiscal spend in Europe? In Europe, is that drafting you back into the Greek army?
I'll be enlisting within the next couple of weeks.
Hey, Greece is one of the superstars here in the Eurozone right now, showing the most growth. It's pretty amazing.
Don't believe in it.
Don't believe it, huh?
Yeah.
All right. Well, we won't. We will not believe it then. Any thoughts before this data comes out?
I don't think anything has really changed during the past several days. I'm mostly focused at the moment. I want to see what's happening with equities here. If this is the beginning of a little bit of a dipper of a pullback, or we're going to shrug it off and continue, immediately from here. Other than that, I think everything else is still moving in the same direction we left it. Metals are moving higher. The dollar is drifting lower. So only equities in my mind is a little bit of a question mark at the moment.
All right. Well, we're going to find out what the market makes of this. We have initial jobless claims, CPI data, and Philly Fed also coming out here momentarily. And then the press conference for the ECB is going to be in about 15 minutes from right now. So here we go, guys. Here it is. Market's looking
Brace
for
for
some
impact.
higher CPI, like a little firmer data.
Soft, soft, soft.
Oh shit. Oh my God, the dollar is getting smashed right now. Holy crap.
Whoopee.
Uh-oh. 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 Wow. Wow. That I did not expect, nor did the market. So, some weak CPI. That is not what we were expecting. What do you guys make of that? I mean,
Another hawkish cut coming in January.
Another hawkish cut in January is entirely possible. You know, it's interesting. You had the euro pop to 117.50, but it's pulled back since then. Not a huge reaction. I would expect a bigger reaction. I mean, sterling just squeezed the heck out of everybody, and that's been a messy move. I know you guys have been really on it. I mean, between the inflation out of the UK, the jobs data, strong jobs, weak CPI, more hawkish ECB. It's been all over the map, and then this weak CPI just spiked us higher too. Real quick before we pass it over to Dale. And Dale, is your interview
Yes.
here? He is. Okay, James is here. Before we turn it over to you, real quick, Ryan came in. Any last minute thoughts about what we just saw?
That's a soft number. It's a bit of a surprise, I must say. So yeah, that's to me that could weigh a bit on the dollar for the rest of the day or on the week, especially thinking about those kind of flows that we saw, those year-end flows. They rather would point at that direction right now. I'm not saying about the last fixings of the year. I don't know about those, but yeah, what we've seen as flows have been rather the side of a bit of softer dollar, perhaps. I'm giving it a go, very small, long euros here, and then see what happens.
Yeah, and remember, it's end of year, and a lot of stuff is going to start happening, and it's hard to draw a conclusion. I was talking about this in the chat room earlier. It's hard to draw a conclusion when you start seeing things happen. A lot of flow-driven moves are going to be developing over the next several days. So be on the lookout for that. The dollar's still under pressure. We've got a bear flag that still needs to complete. As Ryan said, maybe January we get another hawkish cut. Another hawkish cut. Ryan, any last minute thoughts before we turn it over to Dale?
Yeah, I'm just keeping an eye on dollar yen, maybe down to 155. Dollar CAD maybe down to that support. Dale's black line, my line, 137, 20s, 30s.
All right. Well, we'll be on the look. I do believe this is major support for the dollar CAD, as you guys have been talking about. It's also 161% extension. It's near the 618. It looks weak, but we'll see. All right. I'm gonna pass it over to you, Dale. Have a
Thank
great
you, buddy.
interview. Guys,
Thanks.
we will be here tomorrow, so make sure you're around tomorrow. Tomorrow we do have. Let me just confirm. Not only do we have the bank, the BOJ overnight, and which we'll be talking a lot about tomorrow. We have Canadian retail sales, and we have existing home sales, University of Michigan data coming out tomorrow. So there's still a lot of things to do as we wrap up the week ahead of the Christmas holiday, or the holiday season. So you guys all have a great day. Good luck, and we'll see you guys in the chat room, and I'll catch the Forex Analytics community on the Morning Edge in less than 45 minutes with Steve.
Thank you, Ryan and K-Man and Blake. Thank you, guys.
Thanks, mate.
Nice coverage. All right, guys. James, welcome back. How are you, my friend?
I'm doing well, Dale. Can you hear me all right?
Yeah, what a great year for you, this 2025. You were preparing your whole life for a year like this.
Yeah,
right?
it's not a day trade, right? But it's the good thing about it taking so long is that you get to acquire a very concentrated and big position.
Yeah.
Yeah,
So,
it's finally starting to pay off.
Yeah, well, huge move in silver, gold silver ratio We both talked about a reversion trade to the mean, and wow, what a move the gold silver ratio has had, right?
Yeah, I mean, it's
There
been
you
pretty
go.
amazing. I mean, it's down near support. There's like a 3 spike low if you back out that chart, 5 years or so. Maybe you'll get a bounce here, but I don't know. I mean, it's just amazing how fast it's fallen.
Oh,
It's
I see what you're talking about, 2021.
yeah,
Right
it's kind
around
of the
here.
65. There's 3 support levels, but if you back it out even further, then there's congestion. So like a
Yeah,
fight from here back down to the low 50s is possible in this move, I would imagine. But
yeah.
it's just off the top of my head when I look at those charts on a long-term
Well,
basis.
that's why I love having you. You really do use your telescope when you look
Yeah.
at the markets here. So give us a historical perspective. What are you looking for in the year ahead?
So let me share my screen. That's probably the best
Yeah.
way to go.
Okay, buddy.
Um,
You got it.
Probably the best way. I brought some slides for you guys because his visuals
Okay.
is just better than me just running my mouth, and it keeps me on track, and I don't get go somewhere too crazy. Let's see here. Share my
I go
screen.
down any rabbit hole with you, man.
All right, so now people can see my screen.
Yeah.
All right, cool. All right, so yeah, this is just like the bigger picture of this. The whole thing is right now silver's getting this huge move because of a bunch of reasons, right? Technically, it's broken out of its old 50 nominal high, but
Yeah.
all the precious metals are doing well, right? A lot of them are supply demand stories. They're in like big structural deficits. Like silver's been in a structural deficit. Most people will tell you for 5 years, but it's probably been 7 when you add in all the ETF flows.
Okay.
It's a large number. It's over, it's around 1 billion or more ounces that we've sucked out of, opaque places to get kind of meet demand in the last 5, 6, 7 years.
Yeah.
And we're having 1,000-ounce bar shortage, which is the most important shortage you'd ever want for price going higher. So,
Is that's the specs for one of the futures contracts?
Yeah, I mean, 1,000 industrial silver bar that's where the price discovery really happens when like the physical market really overwhelms people who are short and who have to come out and deliver 1,000-ounce bars. And so, yeah, that's where the big wrestling match happens with price discovery. And so if you have tightness in a 1,000-ounce bar market, that's dynamite for, spot price rising, as we've seen, the second half of this year kind of really kicked off in London, where you saw the lease rates explode in October. There was a little bit of a quelling in November, but it shot back in December. And we're going to go through a few slides to kind of describe probably what's coming up next year. I don't think people really have it on the radars when it comes to silver. And this is why it could get really stupid next year in terms of price. I'm going to give you a couple.
Triple digit. Are you looking for triple digits?
I think that's becoming the common narrative now. And I said that pretty much right off the rip, because when you see $50, when it breaks that $50 nominal high, and it's breaking out of those cups, and you look at gold that's already doubled, and silver's in such a tight situation. Well, the tautology is pretty simple. It's going to double. The question is, how quickly, how many like gyrations will there be? Will it happen next year in 2026, or are there going to be some curveballs? I don't know. I mean, this is all guesswork, right? I mean, people don't know the future, but we can at least kind of try and put the odds to our side, I suppose. Okay. The bigger picture of it all, is really the fact that we're staring at a store value crisis next decade. So even if this is like a supply demand issue that we're having in the 2020s, ultimately the debt in the deficits, that's a real problem, and that's coming next decade, and that's probably what's going to fuel the mania phase of precious metals, and like literally where gold becomes the final bubble that George Soros described in the 2000s. Basically that's the last of these stupid bubbles that we've had since the World War II, debt supercycle era. And, this is just an example. That. You remember this when Clinton in 2000, 2001 went up in front of everybody and told we were going to be debt free because we're in a stock bubble, and, we have this gangster accounting where cash account our and we have a surplus and everything's going to be good. It's just lie after lie. And like now, the deficits are just ridiculous, and we're facing a real problem in terms of the debt and unfunded liabilities next decade. So keep that in mind. That's the bigger picture of it all. Right now the silver story is more supply demand, but the longer term story is about a value containment crisis. Literally, where do you keep value in such a horrible situation?
Yeah, and it won't be paper.
No, I mean it's gonna have to kneel for a super cycle. That's basically where we are.
Boy, you're like a mind reader. You this oil silver ratio, is
Yeah,
that
it's
what
pretty.
we're looking at? Yeah,
Yeah, it's pretty amazing. It's blown a lot of people away because they have, again, remember the discussion we've had before about recency bias,
yeah,
and everyone in their lifetime or last half of their lifetime has this recency bias, and they don't look back far enough and think about, well, what was the first half of my life like? Well, here's where oil was in like a range for a long time,
right.
for most older people's lives, and then popped out and it went to this range, and now we're coming down to the bottom, lower half of the range. And are we going to get to 40 a barrel? Who knows? But it's really crazy to see silver, a price of an ounce of silver over oil. That's not really happened much because of a few reasons. This little, I'm gonna zoom in on this just so people can see a little bit better. But this is a little bit more data. This goes back to 1870. Okay, this is like back in the Rockefeller, Standard Oil era. And you got to remember, silver was demonetized at the time, so it doesn't really do us any help to use silver in this data. But you can see how high the spikes got.
Yeah.
And then 1893, there was a huge glut of oil that happened because of drilling in California and Texas, and there was also a crisis financially in the markets. So
Yeah.
this thing went up to near 100. And right now, last I looked a couple of days ago, 76.5. The one thing to remember about gold, revaluing sharply against oil, is that it's possible that we are going back to a world where gold is the basis for the settlement trade and not the petrodollar. And if that is indeed the case, you can pretty much toss this stuff out. I mean, you're going to have oil and gold over 100, that ratio, for a long time. And that's just, I think we have a lot more oil than we have precious metals. And I think you kind of have to get that through your mind, is that in order to get silver, an ounce of silver out of the ground, the amount of work required is a lot harder than getting 1 barrel of oil out of the ground. Okay, it's just a lot harder.
Oh yeah, it takes years. Fracking,
Yeah.
fracking, they can start pulling stuff out of the ground in months.
Yeah, and it's
rather than years in mining.
You got it. And if we are going into a world that's more electrification, like all the different things that silver's used in, and we're in a supply deficit, it just favors silver for a while. I'm not saying forever that silver is going to be this much dramatically more priced than oil, but it might be so for 5 to 10 years coming,
Yeah. I mean, look, we overshot the gold silver ratio on the upside
Right.
at 110, right?
120, 125 it hit in COVID.
Yeah. Well, why can't we overshoot it to the downside and,
Go back
40,
to
40.
go back down to 40, and even more dramatic. I mean, that's how silly 120 and 25 is. So dramatic. That's off the page. The only time it ever got that high was during the Great Depression, when silver got priced at 25 cents an ounce in 33.
Okay.
So it got to like 130 and 33. And so, yeah, it's like the extreme of that 130 high in 33 went down to the mid-teens in 1980. Okay. And so for that to repeat again in a more condensed timeline, totally possible. The other things,
if we have another depression.
Well, 1980 wasn't a depression, right? I mean, the world still functioned. You guys still survived. I was there. I was a year old. I don't remember it that great, but the world didn't end. Bread didn't go to $1,000 a loaf. A lot of people like to say, "Oh yeah, if gold and silver go to this price, the world's going to end." No, it's not. It didn't end in 1980. It's not going to end again. That's just, I'm sorry. That's absurd. People think, and they go to catastrophe thinking, and that's not necessarily the way you should think. You should think about, well, there are huge swings and cycles in history, and certain things go to overvaluations, and they go pretty crazy in manias. So we're just starting this, I think. Like we're starting, and I think the regular public, they're starting to learn that, yeah, okay, we are moving toward precious metals are leading, and probably into a commodity super cycle.
Okay. Yeah, a lot of people are looking for that with things that grow. The only things in commodities that really haven't participated are grain markets. They've tried to bottom for a few years, and it looks like a base, but they really haven't performed at all, like rare earth and metals and uranium and all of that stuff. So
yeah, I mean, look, nobody wants the food to get super expensive, so it's like there's like a balance, there's a delicate balance.
Well, these farmers, before, I don't even know if this loan or the government help is going to keep a lot of these guys in business. Who's going to grow our food?
I don't know. Maybe they just
These
keep
farmers.
consolidating and getting larger, these corporate farms.
Yeah.
I'm going to take you a little bit deeper down the rabbit hole of price discovery
Okay.
in the precious metals
Okay,
markets.
go
July
go
4th,
ahead.
20
I'm ready. Hold on, let me get ready.
Put on your tinfoil hat, everyone. Prepare yourself.
Go-
Prepare your minds.
I love this.
All right.
It's like the Outer Limits. James
Yes.
has control of the TV. You can't change your channel. Go ahead.
Do not take your eyes off this. All right, July 4th, 2022, in a website called Reaction out of London, a guy by the name of Peter Hambro, his younger, I believe his son works for BlackRock in the precious metals mining sector. So you might see his son Hambro, forget his first name, but Peter Hambro's the elder. Peter Hambro came out with an article in the Reaction website on July 4th, 2022, covering the fact that the U.S. comptroller of the currency was starting to disclose the amount of precious metals derivatives in the major 4 U.S. banks that really trade in it. And that's where you see that orange looking bar, that really how it explodes there. That's because they started to come clean with the amount of derivatives that are being traded in precious metals onshore in the United States.
Okay.
Ultimately, like this, they literally swiped this off their website during the gold London fiasco that happened in like late 2023, I think it was, early 2024, where they were having problems in the gold market in London. Well, this thing literally got scrubbed from their website. But the cool thing is we got this thing called the Wayback Machine, and I could just go find it and just show you exactly the type of nonsense that he was talking about. I mean, he basically said, I worked in the London markets in the 1980s. And we came up with this nonsense called unallocated accounts with different banks. And that was kind of the way that we created this huge chimera of derivatives. And that's how we kept gold and silver kind of in check. It was very simple to do because anybody who was looking to get exposure price-wise, we would just, tell them, yeah, they have gold on our books. And it was just a nonsense digital, it was like they just put it on the books and no gold and silver went anywhere. No one bought any gold and silver. So you just had all these different entities.
But they were just bookkeeping entries.
Yeah, it was just bookkeeping, paper gold entries, paper silver entries. So
Wow.
that's basically what they created. It was a huge paper gold market, and that existed literally from the 1980s, 1990s.
Yeah.
Obviously, the 2000s, we did have a gold bull market, but it has existed ever since, and it has kept, I believe, a little bit of a lid on the true value of gold and silver versus other asset classes, and that's really what he was admitting to in the fact in that article. So,
Yeah. Well, is that the picture of that guy? Is that Sammy Slammy? I forgot he passed away. Sammy Slammy passed away. You think there'll be any kind of reincarnation for Sammy Slammy at $68?
I'm not sure,
think
but
we're due?
every time we hit 6-7, all the little 12-year-old memers come out and they love 6-7. So,
Oh, that's right. Where
yeah.
you move your hands up and down.
Yes, and all the perverts will come out at 69, and everybody will make that lame joke.
Oh, God.
Yeah, never.
I didn't think about that. All right. See how old I am. You know how you could tell when a guy is guys are over 40? When they go into a bar, they ask for the menu.
Yeah.
Right?
Instead of QR coding it on their phone and not talking to anyone. That's the worst. Yeah.
All right. So what do we have here?
We're just doing a quick look back at silver when it like busted out for some older fellas on the call who remember this story of silver.
I remember it.
Yeah, making its run when silver got pulled out of the U.S. coinage and basically most coinage around the world. They had it fixed for a little bit there at $1.29, and then once they pulled it out, it made a huge jump. It's hard to see on this chart, but that literally is the price of silver doubling really quickly in a matter of a few years after 1967, and then another one, and then another one. So kind of a 3 impulse explosion to the 1980 high from 129 to 50. So
do you think we're in one here, or
that's why I bring this chart up, because I want you to see kind of where that is. This is, I'm such a nerd now. I can't wait for the Q1 2026 update for this chart. But this is an update at the end of September of this past year. So if you see 46.64 silver top right, that's a little dated. But this is that 3 impulse move we're just showing you, and you go 1, 2, and a 3. Here it's, we're just breaking out of this huge cup right here. And so, how many impulses does this have? I believe it has two. I believe we're in the first. We'll probably get to triple digits and then go sideways for a few years and all that type of thing. And people will say, oh, big whoop, that was your silver mania. No, it's got another one to come when we go to the store value crisis.
Everyone talks about shortages, but if you go to sell your spot, your physical, with any dealer, the bids are like $6 under. So and
that's so weird.
They have plenty of metals. The dealers.
That's the weird part about it. That's the weird part about the market, because there's different layers to the market. When I'm going to go through is 1,000-ounce bar market, which is the most important. What you're talking about is the retail market, which has different things going on. The retail market has we have a hybrid of a few things. You have people who've long held and waited and who are old and need to take some profits and use that currency to kind of survive. So you have a huge, or there's just doubters, people who've been burned so hard, they just don't care. They're just like, I'll take a profit and walk. So you have this gigantic amount of selling back that's been happening. And then to get people to buy, you can't have premiums much higher than what the spot price is because it's climbing. So you have razor thin premiums versus spot. And then you have bids that are lower than what people were accustomed to prior in the markets, 5 years ago.
It's the opposite.
Yeah, I mean, and that's what it is. And it'll probably stay that way unless we have a fear-driven bank failing type of impulse. Then things will go the other way, where all of a sudden products are at premiums at dealers. And if you sell back, you will get a premium to spot. And we go through cycles like that. So it waxes and wanes over time. But, people like to point at that and say, that's why people are crooked and this and that. It's bullshit. That's just the supply demand, fundamentals in the retail and wholesale gold and silver market. That's just the way it works.
All right.
So the 1,000-ounce bar market is probably the most important part. And this, I would say China is now really in charge in a lot of ways. I'm going to show you kind of why in a minute, but this is their Shanghai Gold Exchange and their Shanghai Futures Exchange, silver and gold warehouses, and how much they had. This is tonnage. Obviously, it's gone down precipitously over the last few years. They've been increasing it a little bit of late, but they're at drastically low levels. I would imagine that a lot of this that's been pulled, a lot of it's probably gone into opaque inventories onshore in China. I would imagine any manufacturer who makes, they are the world leader in cars. They manufacture almost half the cars that are made in the world. It's just that the amount of volumes of cars they're making now is insane. And so they got to have silver. And so having a lot, multiple years of silver in your warehouse is kind of a smart move, especially if you can get it cheaper prices before they are now. So,
it's too bad Jim Sinclair, whose idea was to have a cash and carry exchange in Shanghai, I don't know, what was it, 20 years ago, James, isn't around to see how it became, it became everything he envisioned.
Yeah, so many of these guys could see it and could say it, and it was coming, but it just wasn't coming tomorrow. It was coming in a decade or two, and that's just kind of like, thankfully, hearing them and their prognostications or their thinking, you can kind of see the future if you could look far out enough, and thinking in terms of also reflecting on the past, like how other markets done in the past when this kind of shit happens.
Yeah.
Here's probably the most important part of the silver market looking at the 2026. China is going to start having silver export restrictions. What that means in terms of how tightly they're going to control their silver exports is super important because, and I didn't know this, I found this out just last week. Not only is China a top 3 silver miner, they're like neck and neck with Peru. They mine like 110 million ounces of silver, which is, 1/10 of the silver, like 1/9 of the silver, of new line mine silver that comes to market, 1/8, whatever the number is. Yeah. Most people, when they go to look at silver mining, they look, oh, well, Mexico's the leader, China's second, Peru, yada, yada. But the problem is they're not looking or thinking about the refining throughput. Like, just because you pull the silver out of Mexico or just because you pull silver doré out of Peru, where do you go to refine the stuff? Well, you got to go to China because they're the only ones now that have the throughput. They control between the mining that they do onshore and all the different partnerships they have with Peru and Mexico and other places in the world. They control 60 to 70% of the new line silver refining output per year. They control more than half of the market, right? In a restricted market, they have the control. And so that is a problem. If you're caught flat-footed and you don't have a lot of silver, and all of a sudden you look, well, who's in charge? More or less China.
They could, between that and strategic metals, they could choke the rest of the world.
Totally.
Strangle them.
Exactly. That's where we are. I mean, don't let people confuse you or let you think that China doesn't have a lot of leverage in this situation. They have a lot.
Yeah, much more than we do. Go ahead.
This is just a side point. Platinum, you know, it's on its way probably to break its old all-time nominal high from 2008 early. I think 2,300 was its nominal high. It threatened 2,000 nominal last night. It broke out at 1,900 recently. So the 1,900 line was like right around here. So it's threatening to get to 2,000, and 2,300, I think, is its all-time nominal. That'll probably get broken next year. Platinum's
so are we going to go to a premium over gold? Like we used
not
to?
anytime soon, I don't think, but maybe next decade at some point we're going back toward the 1-to-1 parity, bare minimum. I think that does happen later in the next decade.
Boy, was that a layup trade?
Yeah, that was, especially like whenever I sat here when platinum was near 1,000 and would just simply tell people, look, man, if you're buying platinum at 1,000 with a long view, that's a store value. That's not a bad.
Yeah.
Okay. So the final, like, bigger picture ones, just kind of gold and silver. Again, we talked last time about the S&P gold going back to 1. It's heading that way. You can kind of see the 3-prong downfall of this recent, little stock bubble that we've built. But we're at 1.5 roughly, and going back to 1 that's kind of the median of this entire thing. That's kind of the middle. We're basically still at 1929 high levels in terms of gold value. So that just gives you an idea of the bubble you're sitting in. And going back to 1's kind of normal. I would expect that happened in 2011. It happened in the 80s, in the 70s bull. It's probably going back to 1, probably going back to the 2011 low, which is about 0.6, and probably going even lower in the 2030s, probably going back towards somewhere in these levels, somewhere crazy.
1-to-1, could it be 5,000 gold, 5,000 gold? Yeah. 5,000 S&P, 5,000 gold.
Oh yeah, the 1-to-1 S&P gold ratio could happen next year. I mean, that's how quickly that could happen.
Okay.
And the crazier one is the Dow Jones hitting 1-to-1 with gold. I don't expect that'll happen, but whatever. That's just crazy land. To sit around and wait for that kind of trade, you've lost your mind. Like, take the 80% between, in terms of the easy profits, and don't hang around. Go look for another asset class by that time.
Yeah, this chart really shows a massive money flow shift.
Yeah,
really, that's big time.
And if you look at the institutions, Dale, like, they have barely any gold exposure, and so it's just a matter of time for the U.S. institutions get on the train and start moving into this, and that's when it'll really quicken, and this thing will really start coming down in these levels.
What a great interview! You have one more, huh?
All right. One more, and we'll be out. This is the S&P 500 divided by silver. Silver has a better potential upside, I think, versus the S&P. When you compare it, it'll be a little more volatile and crazier than gold. So depending on your age range and your time frame, will depend on how much exposure you would do one or the other on this long-term trade.
Is that Wile E. Coyote's son?
He lost his score. He's about to fall.
Anyway, the ledge has broken. Anyway, the road runners to the left where silver is coming after.
The rut row moment is about to happen. It just had, I think it was 101 yesterday, 101 ounces of silver to get the S&P. And look at like where it got to in 2011, it got down to 25, and getting back into the teens is something that's probable as well. So like these are the types of moves that can happen if you hold silver bullion over the S&P. You have the potential to gain in terms of purchasing power by a factor of 4 to 5. Pretty simply. And that's something that could happen in the next 7 years, something like that, 6 years. So. So that is the case, short term and even longer term, I suppose.
I tell you what, you failed to, you never disappoint, James. You bring some real great looks and commentary, and this is where James has been doing battle, as working with people to get them positioned with his ideas. So, what do you want to say about SD Bullion?
Yeah, I would say, bookmark the sdbullion.com deals page, maybe sign up for the emails. That way you get, if you're like dollar cost averaging into bullion, the key is probably just really focus on the deals page. That's where you're going to find the razors thin margins and, the products that are closest to spot. Like if I was looking at this page today, you have silver bars at spot 10 ounce. Don't go much larger than 10 ounce, I would say. Unless you're going, mega long and doing something crazy in terms of the amount of money you're putting into the system. But you got 1 ounce rounds at spot. Those are nice deals. Crude Rand's only 20 over spot for gold, and then American Gold Eagles, which if you're a U.S. citizen is probably a wise choice. Even Silver Eagles, like if you shop around and look, Silver Eagle premiums are about as low as they've been cyclically over the entire time frame. In 1986, they started. There's only been a few time frames where they've been this low, over that entire, I don't know, what is that, 40 years roughly.
Yeah.
So yeah, we're sitting in a place where if you can get Silver Eagles, a couple bucks over spot, even if they're backdates and they're in good condition, go for it. Silver Eagles are a great choice. So anyways, I would suggest people check out the deals page, and just if you're dollar cost averaging into bullion, it's a good place to look.
Well, you're talking about holding value. Every time you're on, you do. Okay.
I appreciate
You
it.
add value. You add value every time you're here.
Appreciate it, Dale. It's always good to be back.
Yeah, and I hope you have a great holiday season, James. And really appreciate what you share with our community every time you're here. You bring a lot of pearls. I know you're a precious metal guy, but your words are pearls. So thank you very much, buddy.
Same to you guys. Everybody have a happy holiday, Merry Christmas, and a great New Year. Looking forward to 2026.
Yeah, let's kick ass.
Yep.
All right. James Henry Anderson, everyone, and you could find him at that name on X, James Henry and check out where he works and what he does, and get in touch with James. I'm sure he'd answer a question or two if you DM'd him or talked to him on X. So thank you. And thank you, James. And remember, don't just count your Eagles and your Rands and your junk silver. Play the song Loan Me a Dime by Boss Skaggs, and then say, I hope it's pre-1965. Okay? So that's when dimes actually has silver in them. So take it easy, everyone. Count your blessings. See everyone to wrap up the week tomorrow. Adios. And thanks again, James.
Still.